Right now, millions of Americans are checking their bank accounts and wondering, will my Social Security payment actually go up this month? The answer isn't as simple as you might think, and what you don't know could cost you hundreds of dollars every single month. The Social Security Administration just announced the cost of living adjustment for 2025, and while everyone's talking about the percentage increase, almost nobody's explaining who actually qualifies for the new payment amounts, when that money hits your account, or why some recipients are seeing different numbers than their neighbors. Here's what's really happening. The 2025 COLA increase is 2.5%, which translates to real dollars in your pocket, but only if you understand the eligibility requirements and payment schedule. If you're currently receiving retirement benefits, disability payments, or SSI, the timing of your increase depends on several factors that the government doesn't exactly advertise. Some recipients already saw their first adjusted payment, while others are still waiting and don't know why. More importantly, there are 3 critical things that could disqualify you from receiving the full amount, and one simple mistake that thousands of seniors make every year that actually reduces their monthly check. Let's break down exactly who qualifies, how much you'll actually receive, and what you need to do right now to make sure you're not leaving money on the table. Let's start with what's actually happening with your Social Security money right now, because there's a lot of confusion out there, and frankly, the government hasn't done the best job of explaining this in plain English. The 2.5% cost of living adjustment for 2025 became official back in October of 2024, when the Social Security Administration made their annual announcement. Now, you might be thinking 2.5% doesn't sound like much, and you're right to think that way because it's actually lower than the 3.2% increase we saw for 2024. But here's the thing that matters most. It's not about the percentage, it's about the actual dollar amount that shows up in your account, and more importantly, whether you're getting every single penny you're entitled to receive. The average retirement benefit right now is sitting at around $1,873 per month. With this 2.5% increase, that means the average retiree is looking at an extra $47 per month. Now, I know what you're thinking. $47 doesn't go very far these days, especially with grocery prices and utility bills being what they are. But over the course of a year, that's $564, and for many seniors living on a fixed income, that money can make a real difference between having to choose between medications and groceries or being able to afford both. The reality is that every dollar counts when you're managing a retirement budget, and understanding exactly how this increase works could mean the difference between getting what you deserve and leaving money unclaimed. Here's where it gets interesting and where a lot of people start to get confused. Not everyone receives their Social Security payment on the same day of the month, and this is actually by design. The Social Security Administration splits up payment dates based on your birth date, and this system has been in place for years now. If you were born between the 1st and the 10th of any month, your payment comes on the 2nd Wednesday. If you were born between the 11th and the 20th, you get paid on the 3rd Wednesday. And if you were born between the 21st and the 31st, your payment arrives on the 4th Wednesday. But there's an exception to this rule, and this is where it gets tricky. If you started receiving Social Security benefits before May of 1997, or if you're receiving both Social Security and Supplemental Security income, you get paid on the 3rd of every month, regardless of when you were born. Now let's talk about who actually qualifies for this increase, because this is where I see people making assumptions that end up costing them money. If you're currently receiving retirement benefits, you automatically qualify for the cost of living adjustment. You don't need to apply for it, you don't need to call the Social Security Administration, and you don't need to fill out any paperwork. It happens automatically. The same goes for people receiving Social Security disability insurance, survivor benefits, and supplemental security income. The increase applies across the board to all Social Security programs. However, and this is crucial, the amount of your increase depends on what you're currently receiving. If you're getting a smaller benefit, your COLA increase will be smaller in dollar terms, even though the percentage is the same. This is why you might hear your neighbor talking about getting a different amount than you even though you're both on Social Security, there's something else that's really important to understand about how this money actually gets calculated and distributed. The cost of living adjustment is based on something called the Consumer Price Index for urban wage earners and clerical workers, which the government tracks every single quarter. They look at the average from the third quarter of the previous year and compare it to the third quarter of the current year. If there's been inflation during that time period, Social Security benefits go up to help offset that inflation. The problem is that the things included in this index don't always match up with what seniors actually spend their money on. The index includes things like new vehicles and technology, but it doesn't give as much weight to healthcare and prescription drugs, which is where most retirees actually see the biggest increases in their expenses. Let me tell you about something that catches thousands of people off guard every single year, and it has to do with Medicare premiums. Most people who receive Social Security also have their Medicare Part B premiums automatically deducted from their Social Security check. The standard Medicare Part B premium for 2025 is going up to about $185 per month for most people. Here's the problem. That premium increase can eat into your cost of living adjustment, and for some people, it can completely wipe it out. There's a protection in place called the Hold Harmless provision that prevents your Social Security check from actually decreasing because of Medicare premium increases, but it doesn't guarantee that your check will go up by the full COLA amount. If you're subject to higher Medicare premiums because of your income level, you could be paying significantly more than the standard premium, and that comes right out of your Social Security payment before you ever see it. Now, I want to talk about something that not enough people understand, and that's how working while receiving Social Security affects your benefits and your COLA increase. If you're under your full retirement age and you're still working, there's an earnings limit that could affect your benefits. For 2025, if you're under full retirement age for the entire year, you can earn up to $23,400 before your Social Security benefits start getting reduced. They'll withhold $1 in benefits for every $2 you earn above that limit. But here's what people don't realize. Even if some of your benefits are being withheld because you're working, you still qualify for the full cost of living adjustment on your base benefit amount. The COLA applies to your full benefit even if you're not receiving all of it right now because of the earnings test. Once you reach full retirement age, they'll recalculate everything and you'll get credit for those withheld benefits. But understanding this now can help you make better decisions about whether to keep working and how much to earn. There's another group of people who need to pay special attention to how this COLA increase affects them, and that's people who are receiving supplemental security income. SSI is different from regular Social Security because it's a need-based program, which means your eligibility depends on your income and resources. The maximum federal SSI benefit for an individual in 2025 is $967 per month, and for a couple, it's $1,450. The COLA applies to these amounts too, but here's what's complicated. If you have other sources of income that can reduce your SSI payment dollar for dollar in many cases. So even though the maximum benefit is going up, your actual payment might not increase by the full COLA amount if your other income has also increased. State supplements to SSI are also affected by the COLA, but each state has its own rules about how much they add to the federal benefit. Let's address something that causes a lot of anxiety and confusion. And that's what happens if you're planning to apply for Social Security in 2025, but you haven't started receiving benefits yet. The COLA increase affects the base benefit amounts that the Social Security Administration uses to calculate everyone's payment. So even if you haven't filed yet, when you do file, your benefit will be calculated using the updated post-COLA numbers. This is actually good news because it means you're benefiting from the adjustment even though you weren't receiving benefits when it was announced. However, the timing of when you file still matters tremendously. Every month you delay claiming Social Security between age 62 and age 70 increases your benefit, and that's in addition to any COLA increases that happen during that time. Those delayed retirement credits are worth about 8% per year, which is a guaranteed return that you can't get anywhere else in today's economy. Something else that deserves attention is how this cost of living adjustment interacts with taxes on your Social Security benefits. A lot of people don't realize that Social Security benefits can be taxable depending on your total income. If you're single and your combined income is between $25,000 and $34,000, up to 50% of your benefits might be taxable. If your combined income is above $34,000, up to 85% could be taxable. For married couples filing jointly, these thresholds are $32,000 and $44,000 respectively. Here's the kicker. These income thresholds haven't been adjusted for inflation since 1983. So every time you get a cost of living adjustment that increases your benefit, you could be pushing more of your Social Security income into the taxable range, even though the adjustment was supposed to help you keep up with inflation. This is something that catches a lot of retirees off guard when tax season rolls around. Now I want to make sure you understand exactly what you should be seeing in your bank account and when. If you're receiving Social Security retirement benefits and your payment normally comes on the 3rd of the month, you should have already seen your increased payment. If your payment comes on one of the Wednesdays based on your birth date, you need to look at your payment stub or your online Social Security account to verify that the new amount is correct. The Social Security Administration sends out notices explaining your new benefit amount, but these letters sometimes get lost in the mail or accidentally thrown away with junk mail. You can always check your current benefit amount by creating or logging into your My Social Security account on the official Social Security Administration website. This online account is free, it's secure, and it gives you access to your payment history, your benefit verification letter, and your annual Social Security statement. One more critical thing you need to know. If you think there's an error with your payment, or if your COLA increase doesn't seem right, you need to act quickly. You have 60 days from the date you receive a notice about your benefits to appeal any decision or to question any calculation. After that 60-day window closes, it becomes much harder to get errors corrected. The Social Security Administration does make mistakes sometimes. They're processing millions of payments every month and managing an incredibly complex system. If your payment amount doesn't match what you expected based on the 2.5% increase, don't just assume it's correct. Call them, check your online account, and if necessary, file an appeal or a request for reconsideration. The worst thing you can do is ignore a potential error and lose out on money you're entitled to receive.